Hey guys, welcome to this episode of Behind the Charts. This is Dave Keller here at StockCharts.com. I had not met Joe Duarte before I met him at the Money Show in Orlando earlier this year, and it was such a fascinating conversation. I was so impressed by what I learned from Joe that I approached him soon after this conversation and invited him to start contributing content to StockCharts.com. So if you go to our top advisors corner, you'll see some of Joe's recent commentary and recent outlook on the markets. And it really started from this conversation. I've always joked with people that my introduction to technical analysis was fueled by studying music. And I used to look at orchestral scores, look at a whole piece of music and you'd see all the patterns. So the first time I looked at a price chart, I felt like I'd been trained to do it by studying music. Joe has a little different path. He was actually an anesthesiologist. He's an MD and was introduced to the financial markets in the 1980s. And he said when he first looked at a price chart with technical indicators, he had been looking at people's vital signs on the monitors for years, and so for him it felt like he had been trained to do to look for the patterns that I had that same impression from a totally different background. So I really enjoyed talking with Joe about a couple of things. Number one, just how he was introduced to technical analysis. He's been a prolific author. He's written Trading Options for Dummies, the Everything Investing Guide in Your 20s and 30s. He's done a lot of work, particularly for millennial investors, equipping them with some of the tools that they need to have a lifelong positive experience, hopefully, or a constructive experience in the financial markets. I particularly noticed, I asked Joe when he got started. He mentioned his first introduction to the financial markets was in 1987. So it was fascinating hearing those early war stories, those battle scars of him learning to invest in the late 1980s. Biggest points of credit for Joe. We recorded this in mid-February. This is right before the market top, and Joe had given a presentation that day called Trading at the Edge of Chaos. Talk about the most perfectly named session for that moment in financial market history. So here's my really enjoyable conversation with Joe Duarte. Hey everyone, we're here at the Money Show in Orlando, joined by Joe Duarte. Joe is the editor of Joe Duarte in the Money Options.com here from Dallas, Texas. Joe, welcome and thank you so much for joining us.
Well, this is great. I appreciate it.
Yeah, really appreciate it. You were telling me a little bit about the presentation you have coming up tomorrow morning. Can you tell us just a little bit about what you're going to be speaking on?
Sure. It's called Trading at the Edge of Chaos. And of course, it's extremely topical right now, but it's something I've been working on for some time. Okay. And when, as the presentation progresses, people, you can see the light bulbs going off. Yeah, okay, I'm getting this. This guy is not going to be talking about equations and stuff like that. This is practical stuff. This is how you pick great stocks.
Interesting. So for those that aren't familiar with Joe Duarte, can you just give us a quick background? How did you get to this point and what did you learn along the way there?
Very roundabout.
Okay, sure.
I'm an anesthesiologist. And,
interesting, okay.
And I discovered somewhere along the way that looking at monitors of people's vital signs is the same thing, really, as looking at charts.
Yes.
And so it's the same kind of mindset. And I became very interested in that when I got a Series 7. I managed money for a while. Been writing and everything like that since probably the late 80s. Yes. And got several books out, Trading Options for Dummies, Everything Investing Guide, 20s and 30s. It's part of what I do.
Right. And particularly with the technical part of your toolkit, technical analysis, can you talk about how you were introduced to technical analysis? How did you learn it? Sort of what was that part of it?
It just made sense.
Okay.
The first book I ever read, I don't know if you're old enough, I certainly am. Yeah. Marty Zweig's Winning on Wall Street.
Oh, classic book, right?
And then, Stan Weinstein stuff.
Sure.
Then John Murphy, who's a great guy, as you well know.
Yes.
John Bollinger. That's the kind of tradition I bring to this. That kind of old school stuff, but at the same time, putting it together with the things that are happening now.
Right. So how would you describe your process? You mentioned before we started shooting, you consider yourself a stock picker. What does that process look like for you? How do you actually understand or interpret the markets?
So, I look for certain characteristics in stocks. Part of the talk tomorrow is about knowing when you're in the chaos zone for stocks, knowing when you're in what is called the complexity zone. This is really the sweet spot.
Got it.
And the complexity zone is the sweet spot where stuff's about to happen. And then you look specifically for stocks that are in that spot, and then you go for it. And you see what happens. Obviously, you do your sell stops and you do your homework. you certainly have to know the companies, you have to know the supply chain, you have to know all these things.
Right.
But at the end of the day, it's all about that visual thing. You know, that I got this, look at that stock, it's gonna pop, here we go.
Right, right. Can you, so what year did you really start paying attention to the financial markets, would you say?
1987.
A year that might stand out to people. So
Heck yeah.
the beginning, your introduction to investing was this cratering period.
I was a resident in anesthesia. Didn't have a penny to my name. All of a sudden, 3 months into my residency, I walk into the hospital, half the people have the blues, the other half is jumping up and down because they got out. I go, what in heavens is going on? So that's kind of how I got interested.
So what was that like? I mean, so the beginning of your investment experience was 87 crash, and then, the 80s, 90s bull market, this raging bull market. A lot of people have compared to where we're at now. How was that experience, that ramping up process for you?
Well, I mean, it's like everyone else, you have a learning curve. Yeah. I ran into a guy who actually was a resident in anesthesia.
Okay.
The chief resident.
Right.
He was actually managing money for people. He's the guy that got everybody's money out.
Right.
So I said, well, how'd you do that? And he says, well, I'm not going to tell you. But if you apply yourself, if you get interested, if you do these things and you study, you might be able to do it. So I kind of just lit a fire.
Right,
right. And it just went from there. And one day I was, all the time I talked about stocks and stocks and stocks. So a guy says to me, leave me alone, go write a newsletter. So I did. I went out and bought a book on how to write newsletters. Right. And I did it. And one thing led to another, and here I am today.
And so when did you start writing your newsletter? About when?
I think it was like 1989 or something.
Oh, great. Okay, right.
I had a dot matrix printer. I used to cut stuff and paste it. It was crazy stuff. I sent it to Barron's. Right. And Barron's, quoted me. I'm going, what the heck?
Wow.
This is great. So kind of got serious, Here we are.
So we've talked a little bit about your background, sort of when you learned the craft. Can you think back to an example? I love to ask people, when was a period you struggled, right? Was there a bad call, a bad trade, a bad recommendation? Can you give an example of one of those and what you learned from it?
I struggled as soon as the market crashed with subprime.
Okay.
And that was a long, painful period.
That was tough.
Because I did well before that. Like I said, I managed money for people. I was doing well.
Yeah.
And that's when I got into this chaos thing. I said, man, something's different. Something's changed. And I started studying about it. And of course, artificial intelligence changed everything.
That's right. That's right.
So, and it all ties together. The chaos thing, the complexity thing, artificial intelligence.
So you brought up AI. So I have to ask, right, when you think about your process, there's always this balance between more qualitative forms of analysis, more quantitative. And with a background in medicine, as an anesthesiologist, I would think in some cases the quantitative stuff probably appeals to you. How do you balance, or how would you describe your process between those two?
Charts. You look
the
at
ultimate
charts.
middle ground, combining the two, huh?
StockCharts.com.
Good for you.
It's all there.
Okay, I love it.
Bollinger Bands, unbalanced volume, accumulation, distribution, moving averages. And it's there. And if you attend my presentation tomorrow, I hope you would be one of the ones that go, oh yeah, okay, that chaos stuff makes sense.
Right. So when you think about the markets now, we're recording this early February 2020. Stocks continuing to making all-time highs. Bonds have been near all-time highs. It feels like everything's sort of drifting higher. What is your toolkit telling you now about the world? What are you seeing? Where are you seeing opportunities?
Well, the market picture right now is we're in a scary point because there's a lot of uncertainty.
Sure.
Okay. Nevertheless, there's places you can find things that are worth owning. Healthcare and technology. Those are my two big areas.
Okay.
Cancer drugs, arthritis drugs, dermatitis drugs.
Sure.
5G.
Got it.
Chips for everything.
Right.
Everything is becoming automated. Over time, that's where the growth is going to be, and that's where I look for most of my stuff. The other thing is housing.
Interesting, yeah.
You got millennials that are coming of age.
Yes.
You got empty nesters that are trying to dump their big houses.
Right.
And you don't have enough houses. So supply and demand's on the side of the builders.
That's right. That's right.
So those are really the three areas I focus on at the moment.
Yeah.
The market, however, it's an interesting time.
Yeah. So speaking of interesting times, I don't want to completely nitpick on Tesla, but Tesla seems like a perfect example to think about right now, right? It's sort of gone vertical up however many % in less than a week. I mean, it's been ridiculous. How do you think of a stock like that goes vertical, that goes exponentially up? How do you try to get your head around that?
I avoid it. I just simply
wait until
it
normalizes in some way.
Yeah, I mean, when you know, I read something interesting the other day. You know, some guy, I think it was Eisman from The Big Short. He says, you know, it's a cult thing, and I can't get into that. I made a mistake. You know, that's, you know, I go for stuff that makes sense to me. You know,
got it.
Companies like Eli Lilly, KB Homes. This is tangible stuff. You know, I can go out and drive around if I want to and kick the tires. You know, are people buying Lilly drugs, or are they buying KB Homes? You know, stuff that's tangible is what I really go for.
I love that. That's very Peter Lynch of you, sort of like the trade what you know type of mentality.
Marty's right, Peter Lynch.
Yeah.
Kick the tires.
That's great.
Don't fight the Fed.
Yeah.
Don't fight momentum. Yeah.
I love it. So a lot of people, I think, when they're learning technical analysis, they think of it as a long strategy, right? Sort of like a, you know, where can I find the next home run, the next double, triple sort of thing. Can you talk a little bit about how you think of charts from a risk management perspective? How do you use it to manage potential downside?
It's visual.
Okay.
You know, I use the scans on StockCharts.
Sure.
And I just look at charts. Look at 100 charts, and I look for the specific characteristics.
Okay.
Once I find what I'm looking for, I try and learn a little bit about the company.
Okay.
And where their supply and demand things are at the moment. Okay. And what management is thinking. You know? But the chart is the #1 thing. If it's not a good chart, it's not worth looking at the company.
So can you tell me this? And that's a beautiful process you just described. Let me a hypothetical example. You look at the chart, it looks very good. You look at the company, the fundamentals seem a little questionable. How do you reconcile that? Good chart, not as good stock. What does that mean?
So I'll give you a quick example.
Sure.
6-8 months ago, Eli Lilly and Company. They lost the patent for Cialis.
Okay, right.
You know, the stock tanked.
Yeah.
And then it started making a little bit of a base. Then it started making a little bull. Got to the 200-day moving average. I'm going, okay, this is looking better.
Yeah.
Sure as heck. I bought it. The thing popped. You know, my subscribers have made, you know, upwards of 20% in 2 or 3 months with that stock.
Yes.
That's the sweet spot. That's the edge of chaos. That's what you're looking for.
Yes.
You know?
You mentioned a couple of books that you've written, and one, it strikes me, you've written a book really focused on millennials who are just getting, I mean, demographically, they're just getting to the point where they have pretty good investable assets. Can you summarize what you wrote there? What's your message to someone in that age group right now? What they should be thinking?
First, they got to get started.
Yeah.
They got to get a handle on their debt.
Yeah.
And they have to save their money.
Right.
But as they do that, they should be learning about stocks and bonds. You know? And I also talk a lot in there about other things, like, you know, are you going to start a home flipping business? Do you want to get into real estate?
Yeah.
You know, it's a very global book that can teach young people, you know, all about all the different types of potential investments.
Very, very interesting. Can you talk a little bit about the balance between asset classes, in particular, thinking of U.S. versus non-U.S. stocks? How do you think, I mean, do you look at non-U.S. markets, global stocks, and how do you look at them relative to what you're seeing in the U.S., especially healthcare, technology? These are global industries in many ways, right?
I rarely look outside the U.S.
Okay, got it. Focus on close to home.
Because the difference in your ability to gauge whether a company is telling you what's really happening and not is sometimes striking.
Yes.
You know? So I focus on a lot on S&P 500 big stocks.
Got it. Yep.
Because, you know, I want to be able, the data has to be reliable.
Got it.
And the stock has to be liquid.
Sure.
And if those things aren't there, then the edge of chaos thing doesn't work.
Got it. And you bring up a good point, right? A chart is only as good as the data it's representing. And you find that with a lot of emerging markets, frontier markets, you know, there's just not enough liquidity to really get a good sense.
Well, if you want to trade those things, you got ETFs.
That's right.
You know, where you don't have to know anything except it's doing its thing. I'm going to try it.
Yeah. Joe, this was fascinating to learn about you and your process. If people are not familiar with your work, where can they go to find more about you?
Joe Duarte, inthemoneyoptions.com.
That's perfect.
Yep.
Joe, thank you so much. This was a real pleasure to meet you. Good to get to know you. Here with Joe Duarte. He's the founder of Joe Duarte, inthemoneyoptions.com.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.